All right. So again, I'm Vaughn. I'm gonna show you how I make money in the stock market. Just a little quick background. I've been day trading the stock market since 2016, and yeah. So I'm not. I don't make a killing, but I make a little bit. It's a little side income that I make. And anybody can do it. And again, Wall Street doesn't want you to know these things, so I'm gonna be providing this information via my YouTube channel for you guys and your viewing pleasure. It's aimed at high school students because they don't teach this stuff, and you need to know this stuff. Otherwise, someone's gonna try to pull the wool over your eyes, which is a saying that means that what you don't know in this case can hurt you. All right. So when I'm looking to trade the markets, the first thing I want you to notice before we get into FinViz and how I screen is here. You need a broker, right? You need a broker that's going to execute the trades for you. So just like a bank is going to help you with your transactions. If you need to go to buy stuff online, if you want to buy some, you can go into the merchant itself and you can throw down your debit card or your credit card, but that bank that is behind that, where your money is going to facilitate that transaction, or what in trading the parlance is called the trade. They'll facilitate the trade for you. So you need a broker to do that. There's a lot of brokers out there. The one I use is Success Trader. For most, you need to have, in order to trade with Success Trader, I think right now you need at least 25K. So I've got my account reduced down to just a hair over 25K. Today is the 8th of December 2024. So as I make these videos, you'll see this number going up. I withdraw the money regularly so that I can pay for stuff for my family. And I'm going to show you all how to make money with this stuff too. So I've got the broker. Now, don't be frightened by all these confusing screens. It's designed to sort of, make it look crazy. But once you kind of get what's going on, it's really simple. So that's my broker. This is my two accounts. I have my account number hidden. It's 8 p.m. These are 3 stocks that I have up, 3 different companies that I'm thinking about maybe trading tomorrow, which is Monday. Now, I'm going to show you quickly what I look for to trade. So it's going to be a quick video on sort of how I approach my preparation. So when you're looking to trade a stock, you want to make money. How is money made? Well, in my case, I'm going to show you what I do, which is I'm essentially going to be shorting small caps and then buying them back for less money. And you're going to be like, what's shorting? What's that mean? I will do another video on what shorting is, but just bear with me. I just want to get the bare bones out there of what I do to make money. Essentially, what I'm going to do, and I traded GXAI the other day. Matter of fact, I'm going to show you. Why don't I show you a chart of some buys and sells where I made money? That's probably the easiest way to go about doing that. So let's see. I've probably got some old pictures in here. Sorry, this is here we go. Let's see what we got here. Okay, here's an example. So this is a trade that actually has executions on it. So we actually see where I traded the stock. What I do, okay, is I short trash companies. Companies that are dog shit, to be honest. They exist only to hurt investors. They pretend like they're going to do something for investors, but actually they're just trying to take your money and enrich themselves. And this is allowed. This is allowed in Wall Street. It's a common game. And so what I do is I also short the company. And shorting the company is betting essentially that the price of the company will go down. And that's called a short. And if you are going the other way, which is the normal way, you go long. You buy lower and you sell higher. In this case, we're going to sell higher and buy lower. So I'll show you on this chart what I did. These are my shorts. This is a real trade that I took for ICU when it was trading up near $1. You can kind of look over here on the right and you see prices. Okay, you notice 99 cents is the top of this chart. This is a 1 minute chart, so every one of these little candlesticks, which we'll get into, is every minute is one of these candlesticks. One of these candlesticks equals a minute. So you're going to see during the market hours, I'm going to show you a video that's live, that the prices fluctuate a lot. So we had, like right here, if you look, it was around 90 cents. And then a few minutes later, it pops up to $1. After it hits $1, it fails on back down. Now it's at what? 91 cents. Then it kind of hangs out, hits 94, so it bounces between those two. Back up here. These are trades I took. So I shorted some here, shorted some more here, and shorted a third amount here. Then as the stock fell back down, I got out of my position. 1, 2, 3, 4, 5 buy orders. Shorted first, then I bought my shorts in to cover. Okay, and you can look these up. Feel free to Google short. Feel free to look up buy to cover. That's just all I did here. It's really simple. It sounds complex, but it's not. I literally clicked a button, and then these trades occurred. Okay, then as it bounced back up, I added to my short, and it came back down. I covered 3 more. So every time you see a green arrow below a red arrow, I made money. That's how I make money. I short up here, and I cover down here. It looks easy, but we're looking at this in hindsight. These trades are occurring in real time, so when I'm putting these on, I don't know that this is happening. I have a good idea that it will, but I don't know that. So it could keep going up, right? And so that's something we'll talk about when we talk about risk management. But again, shorts, covers, shorts, covers, short, covers, short, short, cover, short, short, and this ends my trade. These are the changes in prices. Okay, underneath here, you'll see volume. Okay, volume is the amount of shares that are being traded. So like for example, you'll see 300,000 right here, 306,000 and 76,000. So you see these big red candles here? These are huge sell candles. That means that in this 1 minute, a lot of shares were sold more than they were bought, so the candle ends up being green. If the stock's going up, then the candles are red. So notice the sell candles are much, much bigger than the buy candles. So that's another really easy way to see that whoever's controlling this stock is looking to sell as much stock as they can and convert it into cash. And so I participated in that. And I identified this stock as one that I wanted to short. Okay, so there's a lot there, a lot of information, and you guys can feel free to ask me questions. But that's how I make money, and I pick out companies that are trash, that I think are going to return to earth. Okay, how do I find them? Okay, how do I find them? Well, I use a tool that's free. This tool is called FinViz. Okay, FinViz. It's finviz.com. You may have seen in a previous video where I talked about what a stock is, what the stock market is. And yeah, so I use FinViz. And what I do is I screen. So what's a screener? I screen the stock market world for the trash stocks that I want to short. Okay. How do I do that? Well, here, if you click screener, I have a bunch of screens that I use. Since 2016, I have been a member of many different trading groups. Learned a lot of lessons from many great traders, and eventually I have settled on a set of criteria that I like for me. And this is the Epica is the one that I use. And what's Epica? Well, I won't tell you who he is, but here's the criteria that I only have two. That the volume's over 100K and that the price is over $1. Okay, so that's it. No, there's one more. Sorry, I lied. There's three, and it must be up over 30% on the week. So stocks that are going up a lot. So once I have this, you can see here, it's going to give me 68 tickers. And that's what we call these. These are ticker symbols, ALBT, just like Roblox, RBLX. That's a ticker symbol you might know. Or Facebook, which trades under Meta, META. Every one of these companies that you know of, most likely, are traded in the public stock market. And so you can find out what their tickers are and you can trade them. Like if you like Tesla, for example, you can find their ticker TSLA and you can trade that. So anyway, I have my list. Now the next thing I do is I'll actually change this to see what the largest gainers of the day are. Why? Because typically with small cap trash, they will fly to the moon on sometimes legitimate news, and sometimes they'll fly to the moon on crap news. And so part of our job is to be a detective and figure out which one is which. And there's a lot of telltale signs out there. But once you screen it, you see 222% gain, 103% gain. You see these stocks made huge moves. Now, this has given me some other good information. One is price. Okay. And from my style of trading, I don't like to trade stuff that's more than $10 a share. 15 would probably be like the highest I'd really want to go, but ideally $1 to $2, $3, like 1 to 5. And if I can stay towards the 1 and 2s, those would be ideal. Why? Well, the stock price is indicative of the strength of the company in many cases. So stock like Google, for example, which is under Alphabet, is going to have a much higher stock price than, say, look at this guy, GXAI, right? Which has a stock price of $2.60. Okay, so low price stocks, also called penny stocks, are typically a place where they're trash, just like I said. So I'm interested in big moves. Momentum is to the upside currently, and I'm looking for the momentum to shift and move to the downside. Okay, so let's take a look at the list here and pick out a couple that we might be interested in. What I don't want to trade are, if it says, see these have M at the end, 17.24 million, that's a tiny company. Okay, 45 million, tiny company. 7 million, really small company. The smaller the company size, typically, the trashier it is. I hate to say that, but it's true. You need to be big in this business to have longevity, to make money. So like this one, 7.2 billion. I'm not going to trade that one short. That's a real company. Once they hit $1 billion, I'm not really interested. I'm still interested to see like if there could be an exception, like this stock might be one I might be interested in. But right now, it's probably had good earnings. It probably makes money, and it's breaking out to the upside, and it's $1 billion company, 7 billion in this case. It's not something I'm interested in. I'm interested in the cheapies, these little $8 million companies. Okay, hopefully that makes sense. So I'm gonna look at these. How do I do that? Well, I'm just gonna type them into my system here. So we saw UPC, for example, and I'm just gonna move that out of the way for the moment. So I'm in my broker software. I'm gonna type in UPC. Okay, here is UPC. So I've got the daily chart. So this chart is the first chart I look at. And in this chart, it's going to show me the daily prices of this stock. Now, you can see some pretty catastrophic stuff has happened to the stock price. This stock used to be worth 60 bucks back in the day. In this chart, every candle is 1 day. So this, for example, this big red candle, this was the change in price that occurred over the course of an entire day. So on this day, September 12th, it opened, we see the O there at 45.15. And it went up, it went down, it did all these things. It ended up closing at $25.05. So it went down dramatically. So if you shorted this stock on that day, you'd have done very well. Same thing with the next day. It also went down. Red candles are where the price went down. Green candles are when the price went up or closed above the open. Okay? There's a little bit more to the candles. We'll get into a video on technical analysis, but I'm just showing you a stock I might be interested in trading. Now, I am interested in trading this. So the last time I traded was Friday, so today's Sunday, and we're looking at it for a potential trade. So this candle, when you see this wick up like that and come all the way back down, that means whatever happened on this day, it made it almost reach $5, but then it faded all the way back. It faded all the way back to close the day at 339. So that means that while it is good, it is green, it looks like people were not so bullish on it that they push it up and close it higher. So like, look at the difference between that candle and like this candle, for example. You see in this candle, the close of the day is at the top. That's bullish. That means it's likely going to continue on the next day. See, like this one, continue into this day, continue into this day. Okay? And then when it had this big move, look what happened. The next day, it was red. So I think it's a good chance tomorrow we get a move back down. And the trend generally is down. So even after it had this nice run, we just faded a couple of days all the way back. I am aware, though, that this thing used to be up here. And so that is a little bit of a cautionary item. So, you know, risk management's got to be tight. So once I have decided, okay, I like it, this stock kind of fits my criteria, it's the right size, I'm gonna take a quick peek at the rest of the fundamentals. So I'll actually click on this guy, and once I've clicked on it, I'm looking to see if there's any reason not to get involved. Is there a reason not to get involved? There's something about this that might scare me. So I'm going to look at just a few things in here. One of them I already told you about, market cap. Is this $1 billion company? No. So I'm okay there. The next thing I'm going to look at is over here, insider ownership and institutional ownership. If institutional ownership is a large number, say, I don't know, 30% or greater, that means that there's some real money involved. There's like big players that own the stock. And typically I don't want to play in the game where these highly sophisticated investors are playing. So this is a good sign. Only 2% are owned by institution, 2.86. The other thing I look at is insider ownership. If this number is particularly high, that means the insiders are controlling the stock and they can manipulate it up, down, and sideways. So the fact that both of these are very low is a really good sign. So that was what I was checking there. The last thing I check is the float. This is the number of outstanding shares available to trade. Okay? This is the total amount of shares that's out there that they've actually issued, but this is the amount that are freely traded. They call it the free float. Okay? So that's a very small number. This stock only has 1.44 million shares available to trade. Just to kind of give you an interesting comparison, the last day of trading, if you look at the volume at the top right, you'll see it right here. It traded 93.4 million shares. That means that the float was traded like 90 times, or 50, 60 times, whatever that volume number is divided by 1.44. That means the same people bought and sold multiple times. Okay, so this is what you consider low float, and that can be very dangerous for shorts. So it's something to be aware of, but I'm still interested in it, but I'll probably play a little bit smaller size. So with this float though, typically like a sweet spot would be like 10 million shares or more would be better. One more thing I like to check is I like to see if these are a habitual diluter, meaning they screw over the stockholders on a regular basis. How do I check that? Another website, bigcharts.com, or bigcharts.marketwatch.com. I'll give you the links to all these tools, but I'll type it in here. So we'll type in UPC, Universe Pharmaceuticals. Go to the advanced chart. And you go here, and you're going to click on big, and you're going to have them draw it. And then what I want to look at is like a 5-year. Like I really want to see like back in the day how it's going. Okay, so it's not a bad. This isn't bad. Now you see hundreds over here. It was 180 at one point, but things really started off in 2021 back here in April. That's when the stock really started trading. And it's really traded nothing but down since. It's had some spikes, but it's really traded nowhere. All the way from what looks like 60 to what 100. I mean, this is just a one-day spike probably, but traded back down to like 80, and then then it's been just trash all the way to 10 and below with a movement to 30, then back to 10, and then another little spike, and then back down to like 5. And we have this gap that happened, and so eventually they needed to close that, so that came there, and then back to 60 somehow, and then bang. This is typical of pharmaceutical companies because they're trying to build a drug. They're trying to spend money on this drug and invest this money in this drug, and they'll spend millions of dollars trying to bring it to market, and then the drug doesn't work. And that's what happens to the stock. So this isn't a typical trash company per se that I would short, because there's some evidence of legitimacy here. So I'll just look one other place, and this is more of an advanced thing, but I'm going to do it in this case just because this one does have some legitimacy to it. I'm just going to look at their financials real quick, and I will do a separate video on financials. Cayman Islands, it's always a little red flag. Some Chinese stuff. That's actually interesting that it says that. So I'm wondering if this is a Chinese company. It is. Okay. So fair warning. Chinese companies generally, when they trade in the U.S. stock exchange, they can be pretty shady. They can manipulate these things up and down, and sometimes they don't follow typical price action. So you really have to be careful. I almost, as a rule, don't really like to play with this because it's Chinese. But I'm going to take, just for the sake of the video, I'm going to take you guys through a quick exercise to see. What I'm wondering is how much money they're spending on research and development. If it's like a reasonable amount. If it's like nothing, then I'm not going to really care. So here's our balance sheet, and we'll do some. Don't worry about this. We'll go into this later. But it's a $53 million assets. They own assets of $53 million, and they do have some equity. So that's good. That's actually a positive. A reason why I may not want to trade it. Okay, I see some. They actually make money. $32 million. A lot of pharmaceutical companies do not. So that's another strike against me wanting to trade this. And then there's R&D. So it looks like they have a year end of September 30th. They spent about $5 million, $7 million before that, and $5 million before that. That's a pretty small number for a pharmaceutical company, $5 million a year. But this is not small. So $32 million. They are losing money, but that's a pretty significant figure. So it's possible I might trade it, but it's probably bottom of the list in terms of if there's better opportunities out there. I'm gonna look to some of those. But for the sake of the exercise, the last thing I would do, let's say everything was golden. Let's say they had negative equity and they had like no money spent in research and development. This was truly a company that had all the red flags there too. The next step is to decide where I'm interested in trading this company at. Okay, what price do I think I can make money? All right, so what I'm going to do is I'm going to actually go to the 5-minute chart. So you see up here on my broker's platform, which uses DOS Trader, I have different time frames. So I'm going to click this 5, and then I'm going to zoom out. And now what I'm looking for are key levels of support and resistance. So what I'm going to do is grab a little drawing tool here, a little horizontal line, and I'm going to look where the price stops. So you see the price during the last day, huge spikes up to this line here. See right here, 450, and it faded all the way back down to this line here, this 269. And it has a lot of variation in between. Now I know you have this one spike to 5, but just generally where the money really changed hands is going to be in between these two prices somewhere. There are other levels of interest. Notice right here, you see it pops and down and pops and down. So 4 is interesting. Okay, and if you notice also right here and right here and right here, it stuffed and came down. You'll see 350 is kind of key. Now what I'm painting a picture here is that every 50 cents is an important level, and this is good. I like to trade like this. These are the levels that I'm interested in. Now on Monday, let's just assume that the stock is still right where it is, which looks like the last trade was about 370. The first level that I'm interested in is going to be up here at 4. So I'm going to wait. I'm going to put an order out for $4, and I'm going to hope, and I'm not just going to hope, I'm going to make sure that that I place my risk accordingly, but I'm going to scale some short here at 4 and some at 450, but if it goes past 5, I'm going to exit the trade for a loss. So ideally it hits 4 and then it fades back to 350 and I'll cover out for some profit, just like in that chart I showed you earlier. Let's see, where did I put it? I think it was this one, right? Yeah, ICU. Yeah, so just like in the ICU chart earlier, just like here, see I was shorting up towards 1 and then I covered back out. That's what I'm looking for, and that is how money is made. Now if you're buying this stuff, if you're buying it, let's say you bought at 3, then you can sell on the push up here. So that's all that's happening in the stock market. There's somebody on the other side that's willing to sell me the shares, and another person on the other side that's willing to buy the shares, and you're trading against everyone else that's trading out there. And so if you're more disciplined and you have done better research and prepared your day better, then you can make money. And people can make money, and the amount that they can make is unbelievable. So I know this video went rather long, but I hope that you got something out of this. And I know there's a ton of topics to dive into, but we're going to stop this one here, and then we'll move on to some other ones. Thank you.